The Monetary Policy Committee of the Central Bank said the decision to reduce the policy rate by 150 basis points after staying at 16% for 7 consecutive times was influenced by global developments such as the impact of COVID-19. Aside the tumbling of stocks and the plummeting of prices of commodities like oil, economies have had to revise projected growth targets for 2020. In Ghana, the pandemic is expected to lead to a shortage of some imported goods from countries like the US, China, and other European economies. It is in the light of these that the MPC said even though inflation is still within the margin of 8% plus or minus 2, it considers the need to ease the anticipated burden on businesses. Professor Citi tells Citi Business News banks are expected to trigger the margin of reduction in their cost of credit to businesses.
There's one thing reducing the policy rate, and there's another thing the banking also reducing their lending rates, because banks take into account several other factors, including the systemic risk in the system. And so what we expect with this new policy rate reduction will be that the banks and the private sector will also react positively and favorably in a way that will transmit to the ordinary Ghanaians, so that the lending rates and then the interest rate on borrowing would go down significantly.
Though he agrees that there is more room for a reduction, Professor Isibe said the COVID-19 presented an opportune situation for the central bank to heed calls for a reduced policy rate. Meanwhile, the capital conservation buffer, which is money that is required of banks in excess of the minimum capital requirement of 400 million cedis, has been slashed by 50%. The buffer is now pegged at 1.5% from the initial 3%. Again, Professor Isibe says this should improve liquidity in the system by reducing the risk faced by banks in offering credit to businesses.
Buffer reducing to 1.5%, meaning that the capital adequacy ratio now has also reduced. So banks don't have to have so much capital against high-risk assets, which then means that the banks can give out more loans even to risky sectors. And so it is all geared towards increasing liquidity in the system.
For now, businesses will await the impact of the central bank's decision, even at a time that appeals have been rife for the government to provide stimulus packages to some critical sectors in the ultimate event of a lockdown which will affect economic activities.